maybe take some money off the table.
Philippe, we'll leave it at that. Thanks so much for joining in and giving us those views on the European markets. And for now, even the peripheral markets are taking it under quite a bit of pressure as we speak. But keeping it then with some management voices, and incidentally, a stock MMForgings has been in focus with a lot of mid-cap funds heard to be very active in some of these forging stocks such as an MMForgings. In fact, just recently you had Franklin Templeton, which recently bought close to 70,000 shares in the company. Vidyashankar Krishnan, the managing director at MMForgings, in fact spoke to us saying that the company is aiming for a production ramp-up in the coming months and also has a target in FY15 of 38,000 tons. Let's listen in.
Last year, we ended 31st March 2014 at about 32,000 tons of production as against an installed capacity of 40,000 tons. Over the next 6 to 18 months, we will be adding another 5,000 to 8,000 tons of production capacity. In the meantime, we expect our utilizations to grow to around 36 to 40,000 tons in the ensuing months itself. So FY15, we should be hitting around 38,000 tons, give or take 2,000 tons. See, we are largely export driven, so to a considerable extent our margins are driven by the exchange rate. Having said that, export customers have also woken up to the reality of sharply increasing exchange rates, and they also want a share of that. Well, that helps protect our business. Ultimately, one is the exchange rate. The other factor that impacts margins considerably is capacity utilization. At these levels of capacity and at current exchange rate, assuming that both prevail, we should see margins well in the region of 20+%, say 20 to 22%. 2015 and onwards, I think we should be looking at EPS in the region of around 30%. Sorry, EPS in the region of 30.
Okay, EPS in the range of 30, which means the stock is currently trading at exactly 8 times 1 year forward earnings, or the FY15 earnings. Maybe FY16 could be better. Mind you, again, a play on the CV cycle recovery. It's a company, auto component company, that is fairly large in terms of catering to CV, the CV companies. If indeed the CV cycle were to recover, stocks like MMForgings, Amtech Auto, Automotive Axle, etc., all of them would benefit. I think that's the reason why the stock has done what it has done in the last 3 odd months as well. What's also done well in the last 2 or 3 odd months is Technocraft Industries. It came out with a very robust set of numbers for the March quarter, but the last 1 month, it's actually come off a bit.